Good morning, everybody. It's Dave Fry, ETF Digest with an ETF in focus. Let's take a look at AGG, which is the iShares core total U.S. bond market. And we're looking first at a weekly chart. And you can see we've had this descent since May with the beginning of the idea that there may be a taper. And we've come down with our annotations of the high-low. And you can see we had a low here. We also had one back here, not as significant in February, probably because the RSI and so forth wasn't that extended down on the low side on this weekly chart, but we did have a reaction to that as we moved back up, and then we turned back over along with this long-term MACD histogram, and we came down here at the end of June with a climatic low, whereupon we rallied back up. And now if we look at the daily charts, you can see that we're declining once again as the taper is back in play, given what has taken place with employment data from the ADP today, and of course this recalculation of the GDP methodologies going back to 1929, which is kind of fun to talk about, but really doesn't make any difference right now in this report. I'll talk to it about subscribers later. But you can see that we did on this daily chart, we did rally up here. We did have this high-low, this high, which is proprietary accounting measure, register, whereupon that marked the top of this short-term rally, and we have come back down now, gapped lower, all because of what is perceived to be the taper coming back in. We have no position in AGG, but if you're interested in following this or any other ETF of the 670 or so now that we cover, including some futures contracts and so forth, take a free trial at etfdigest.com. Have a great day. Let's see what happens after the Fed meeting.